the domestic credit in the economy. Then we look at domestic economic activity and outlook. That is, we look at how the economy is faring in terms of growth and what we expect growth to be in the near term. And then, at its meeting held May 15 to 16, 2023, the Monetary Policy Committee decided to increase the monetary policy rate by 25 basis points, 9.5%. In arriving at this, the main factor, the key ones are the ones we highlight here. One is that actual inflation averaged 9.6% in the first quarter of this year. And we are projecting that inflation, although declining, would continue to be above the target range, which is 6 to 8% over the forecast horizon. Now, in addition to noting that inflation is well above the target range, we also took into account other factors. These include the fragile growth that we have been experiencing. Yes, the economy last year is said to have grown to 4.7%. But if you look at the population growth rate, that still is not good enough for us to really be saying we are growing very robustly. It's good. Yes, we're growing, but I think we need to grow a lot more. Then we are also mindful of the vulnerabilities and risks that we see in the financial sector. I think in the social media, we saw people wondering what are the vulnerabilities that we keep talking about, and now we have even added risks. Well, the thing is that the financial sector is susceptible to a number of things. One of the things that we look at is the concentration ratio in the market, the credit risk that they face, the issues to do. So all these are satisfactory at the moment, but if you look at individual banks, some of the banks may not be as strong as the next bank. So we look at that very carefully as well. But you also be aware that in the new Bank of Zambia Act, which is soon be operationalized, there is a clear statement that the mandate of the bank is the price and financial system stability. But in the event that there is a conflict between the two, monetary policy decision or price stability prevails. But that means obviously we have to take time to understand what is going on in the financial sector as well. We noted also that there are some benefits that could, before inflation, that is, inflation could actually come down should we be able to get the long outstanding extended debt restructuring negotiations concluding. And we see this working its way through the exchange rate channel. As you'll see later on, we do share what already happened. For example, when we had the SLA announcement in April, at the beginning of April, there were quite some positive sentiments, which coincided with some improved supply of foreign exchange, and the kwacha did appreciate. So quickly, we are saying that the growth is fragile. Is fragile. There are vulnerabilities and risks that we see in the financial sector, which we must be mindful of. Then we see potential benefits that could arise from the successful conclusion of the debt restructuring that is underway. Now, inflation, I did point out that it has declined, but marginally in terms of if you move. I think the best way to do this is to show this chart here and table. The table on the left side of the screen is divided into two. The top part of the table shows you what is happening in average terms for each quarter. The bottom part of it, we are showing what is happening at the end of the period that we are looking at. So let's take at overall inflation, for example, on the top part of the table. You will note, this is what I was saying, that it has been coming down. If you go as far back to Q1 2022, it was 14.1%. Q2 2022, it came down to 10.5%. Q3 2022, 9.9%. We closed the year at 9.8 for the quarter. And in the first quarter of this year, it has come down to 9.6. So all that is very, very encouraging. And the components of that, if you look at food inflation, it was as high as 16.1% in the first quarter of 2022. It has come down to 11.7% in the first quarter of this year. The end period numbers tell a similar story. But what we are saying is that when now we project going forward, we see that this is moving in the opposite direction. Already, I think as has been pointed out, Zamstat announced 10.2% being the level of inflation in April. So that is something which we are concerned about and we have to do something about. So when we are looking at these changes that I referred to, the factors which are behind those movements, firstly, are what we call dispersion effects, which were manifest in some of the goods that we see in the basket. And we see also a reduction in the oils and fats, which are related to soya products. Now, in the basket, the notable items we picked up were which experience dispersion effects. You see, we have tried to define that dispersion effect. If you look at the statement itself, we try to help people understand this once again, what it is. But we see passenger transport, fish, fuel, bread, and the cereals as being the main ones, and of course, rent. Now, when we look into April, which is past the quarter, already, as I said, inflation has risen to 10.2%. Now, one of the major drivers for that has been this strong regional demand in maize grain and maize meal. You recall in our previous briefing, we did point to the fact that whereas Zambia, we had some surplus of maize production and the other agricultural commodities, some of our neighbors didn't have that. So we had, even then, it indicated that there is a likelihood that there would be pressure on the food that we have, and this has come to pass, that we see this pressure. But as has been spoken in other fora, this is an opportunity, in effect, for us to ramp up production, and I think the government has already responded by removing bans on exports to encourage those who want to produce more maize to do so. Often people are struggling to get markets. We are fortunate we have a market, but somehow we are not ready to meet that demand. Perhaps in the period ahead, we should be able to do so. So now moving on, we see that the pressures that we see building up in April are likely to persist over the forecast horizon. So what we are seeing in our projection is that when we did projections of inflation in our February meeting, we saw that the inflation path was deviating away from the target range of 6 to 8% throughout the forecast horizon. We see this time around that there has been some lowering of that trajectory, but still is above the target range. And it's that aspect which is telling us that if we don't do anything, we could end up having inflation continuing to stay above our target. So the adjustment that we have made of 25 basis points is meant to signal that we want inflation to move in that direction. Obviously, there are still other tools that we deployed, which are in operation. In February, you will recall, we did adjust the statutory reserve ratio by 2.5 percentage points. We also followed that with the 25 basis point adjustment in the policy rate itself. There is also, in an indirect sort of way, some moderation coming from the sale of foreign exchange, as you see here, which moderates the movement in the exchange rate, which has quite a very strong impact on inflation. So figures, what we are seeing is that in the current forecast, we project that inflation will average 10.5% and 8.4% in 2023 and in 2024 respectively. The respective numbers for the previous forecast, that is the February forecast, were 11.1% and 10.1%. That's what I'm saying, that whereas the previous time it was more elevated, this time it has kind of come down, but still those figures are pointing to a situation that inflation is still above the target range. It will come down to 8.4 by the end of the quarter, or the first quarter of the forecast, or the last quarter, sorry, of the forecast horizon, which is Q1 of 2025. Now, as always, we also look, what are the risks to this inflation actually being even made worse? Well, one of the topical things which is on everybody's mind is these delays in the conclusion of the restructuring negotiations. Good progress is being made, but we have yet to conclude. Now, what we are saying is that if this is delayed further, it has adverse implications for inflation and other factors in our economy. The tighter global financial conditions, I think Sulanji did mention what is happening in the US, what is happening in the UK, and the many other countries. They are tightening their monetary policies, and it's doing so. Interest rates are rising. This is posing pressure on capital flows for us here. We have seen some of the players in our domestic market actually divesting because they are searching for better yield in those countries. So to the extent that this continues, we are going to continue to have those kinds of challenges. We also note that the high maize prices, which have gone up. Now, this, if it's made worse by lower production in the current season, the season that has just gone by, we are anxiously waiting to hear what the Minister of Agriculture will be saying, what is the level of the crop production this year is. Signs are that it will be less than it was the previous year. And that prices and other things, we may see that impacting negatively on our inflation. Then we see this prolonged Russia-Ukraine war. You recall when it broke out in February of 2022, no one expected that it up to now will be talking about this. But there you are, it's over a year now, and there are no signs that it's letting up. And that has continued to put pressure in a number of areas. Economies are responding to that. We are also doing the same here, but that matter still remains unresolved, and it's creating more tensions as we now see this bipolar world emerging in the global economy. Now, let's turn to the foreign exchange market. As I said, what we are seeing is that the kwacha depreciated in the first quarter of this year. It depreciated by 16.8%. That's quite a huge depreciation, and you can see that on the chart on the right-hand side of the screen. Now, the drivers for this development are that we have had excess demand for foreign exchange, which coincided with low supply on the market. Then we see that the players in the market, yourselves included, you are not quite happy with what is going on with the debt restructuring, the negotiations, and then the tighter global financial conditions that I referred to. All that combined to put pressure on the kwacha. Now, if you just see what we mean when we are saying that there's been low supply of foreign exchange, this is one good indicator of that. If you look at the chart there, where we are showing what has been the uptake from the mines in the way of mineral royalties and the other taxes, you can very well see the right-hand side of the chart, which is Q1 is the extreme right. Then you see Q4, it was about the same kind of supply. But look where we came from. If you look at Q2 2022, we were way up there, but that kind of disappeared in the period ahead. And that is creating challenges. And so when we are saying that we need to export more, this is what we are saying. If we continue to depend on the mines, this may very well be what we have to contend with now and in the future. As a matter of fact, as a country, I think we have been dependent on this for so long. Some of us, when we went to school, we are hearing about diversification. We are now in our evenings of our life, or is it afternoon? We are still talking about a diversification of the economy. So we really need to do something about that. Why should we continue to be so tied up to what happens to copper? Because crises have the inbuilt tendency. They happen and they happen again. So this is something that we should work on seriously. So what we are saying is that the kwacha depreciated in the first quarter of but now in April there was a change. We see the kwacha appreciating by 16.8%. It's not a coincidence. The number is, we have checked and checked it again. The depreciation in the first quarter we are showing was 16.8%, and the appreciation that we saw in April was 16.8% as well. So you see that just some positive news, a bit of supply, the kwacha responds. So this is what happened at the end of March. We saw that there was some improved flows because this is when players do file in their taxes. So we saw some improved supply. That was accompanied by good news in that we were able to reach a staff level agreement with the IMF mission, which was doing a review of the first review of the ECF, that is the Extended Credit Facility under the program. So that, combined with that supply, resulted in the exchange rate responding in the manner that it did. So you can very well see that if supply continued, if good news continues, then would have some good stability in the foreign exchange market. Now, when we talk about this, let me just share with you here. See, this is a chart which the IMF has shown. It's a chart of the week or the month in March. What you see here is what is happening to all African currencies combined. This is an index. What you see, if you look at the first point where it changed, you see where it was at its peak when the Russia-Ukraine war broke out. From that time, our currencies have been under extreme pressure. Then the Federal Reserve started the tightening. See what has happened to all currencies. In this period, what we see, the ones who have borne the most brunt are the Ghanaian cedi and the Sierra Leone, which have depreciated by about 45%. On average, all our currencies have lost about 8%. So you can see that this is a generalized problem, but the magnitude of the issue is determined by the local conditions. So if you have a bit more room to maneuver, you may not be badly affected as when you don't have. So this is something that we need to bear in mind, that all of us are dancing to one tune or the other in terms of our currencies. Now, back to this position that we are talking about. As of yesterday, actually the kwacha was trading at 18 kwacha 45 ngwe per US dollar. So it's still lower than the last time when we met here, as Rulanji shared, but the pressure continues to mount, so we need to find ways of augmenting that supply, and that's why we are also putting a lot of emphasis on conclusion of the restructuring, because with that, immediately there is 1.8 million that can be released, and that will attract other flows in turn. Now, to manage the situation in our economy, obviously we have to do something to support the market. Otherwise, you wouldn't have the fuel that you're having now. We are saddened that there has been a rupture in the pipeline, which just started pumping finished products. So that is a positive, and we have seen since the pipeline came online, the demand for some of that, some of that demand we are seeing has reduced, but there's still a sizable demand for oil and other related products. And of course, we see continued demand for dollars for agricultural inputs, because there are instruments that were issued earlier in the year which are maturing in a staggered way. And as they do, the owners are looking for foreign exchange. So for us to be able to move forward, we do respond to those needs. And in so doing, we find that the reserves have come down to $2.9 billion from $3.1 billion that we had in the previous period. That was as at the end of December. So at the end of March, what we are saying is that our reserves are at $2.9 billion, which is equivalent to 3.3 months of import cover, whereas the $3.1 billion was equivalent to 3.8 months of import cover. Now, what we try to show you here is the respective imports, because we look at the prospective imports. So what you see here, that the prospective imports have also gone up and compared to the previous period, hence the larger change in the way of import cover. Now, imports come in different ways, obviously. If the imports are of inputs to the production process, then you should expect that in the subsequent period, we should be getting the benefits of that. But if they are predominantly of consumer items, it means we are really shipping away the dollars. Of course, we are enjoying the goods that we are getting, but it means that we have to continually be looking for dollars to meet our demands. So what we are saying is that as we do that, it is important also to invest in productive areas so that you can be export earners rather than just import dependent as we tend to be. So moving on, we look at the current account. What we see is that it narrowed. Now, in this setting, I'm not sure, is it deficit or a surplus? I think we may have a change here. So what it is that the imports have gone up, whereas our exports have not grown by a large margin. So what we show on the right-hand side here is the movement. The dark line there, the line is showing what the overall current account balance is. So you can see that it is coming down very strongly, and that is also sending messages to our exchange market that no, maybe you don't have enough capacity to import the things that you import. But the good news is that in the period ahead, we see that actually recovering quite strongly. The terms of trade are projected to improve, meaning that the prices of copper are expected to rise. And if that is accompanied by increased production as we expect to be, then that picture will change and that will really have positive implications for the economy. So this is what we are saying about the current account, that it's narrowing, but the medium term, we see that rebounding very strongly. Domestic credit and money supply. In the credit sector, we see that actually growth has been quite strong, although there has been a slowdown overall credit. But when we dissect that, what we see that actually what has come slowed down is credit to the government, but credit to the private sector has remained robust. What we are saying is that you have year-on-year growth of 35.9%, whereas in the previous period it was 34.2%. So that level of growth is quite appreciable. Now, this chart which we are showing on the right here is what demonstrates what I was saying. If you look at the blue lines, the blue shading there, take a closer look to the right side there, you see December, those bars were getting more noticeable, but look at much higher. So this is what we are saying, that private sector credit is growing. But obviously, is where is it going, which would be an issue which you want to interrogate to see, is it going to the productive sector or what is happening? What we see, what we see currently is that a lot of credit is going to the households. And you have seen, I think banks are advertising for personal loans being available. And I'm sure seated in this room, some of you have access to that. Now, what we are trying to do there is that, can people be able to borrow directly for the projects that they are doing rather than coming through the channel of personal loans? Because when you do personal loans, usually the underlying collateral is the payslip that you have. Now, what if you don't have a payslip? Can you still be able to access this? These are some of the things that we are talking about in the financial sector, that we need to have the opportunities for people to borrow directly so that we can follow that actually, it's going into projects. But we know too from practice that those who access these household loans, much of that goes into these kinds of projects. So there is that positive part on that part, but we could do a lot better if we had more directly to the productive sector. So we are saying that this is growing. Now, maybe what I haven't come back to is that, where are we bringing all this and what is the relationship to the policy rate? I'll come to round that up to show why we are showing what we are showing and what is the relationship to the policy rate adjustment that we have done. Then when you look at domestic economic activity, what we see is that in the first quarter, there is some bit of moderation in that. On the right-hand side here is a chart showing the Stanbic PMI, that is the Purchasing Manager Index. The dotted line there, the black one, the 50 mark, is what determines if you are below that, it means that activity is not positive. Above that, and you see the color coding is also showing green. So what we are saying is that in the period that we are reviewing, we were below that line, which means that economic activity had slowed down. Now, on the left-hand side here, we are showing what our own in-house survey is producing. This, we sample a number of firms to see what they think is going on. So here, what is must be of interest is to look at the blue shading, this spider web. If you look at the blue, you see that in some parts is inside, other parts is outside. So if you look at volume of services, that is outside, which is positive. So the idea is that you should be, if all economic activity is going on well, that the latest spider web should be outside. You should be more towards the outer edges of the overall shape there. But what we are seeing is that some are inside, only in the case of the volume of services. So that is indicative of that there is less economic activity. But when we look for the year as a whole, we see that the projection by the Ministry of Finance is showing that actually the economy is growing. As I said, 2022, we saw a growth of 4.7. So this is what you are seeing here, the projection of growth. Look at the right-hand side of this chart. We have provided the numbers there, which you can see when you look at 4.7, that's 2022. Now you go into 2023, there is some slowdown. But when you go into 2024, we see that the economy is rebounding to, I think, 4.8, then a slight moderation to 4.7 in 2025. So yes, in the first quarter, there has been this slowdown and not as much economic activity. But as the year wears on, we should be seeing more economic activity happening in the economy. And I think that's consistent with the messages which are coming on developing the farm blocks and the other types of economic activities. Oh, sorry. Who is helping control? I have lost it. Okay. So now, what is the story here? Why did we have to raise the policy rate? One, we're saying that inflation where it is way above our target range. Two, when we look over the forecast horizon, inflation will continue to be above the target range. Then the risks to that inflation are stacked to the upside, meaning it could actually persist. So we felt that we needed to indicate that this is not the direction we need to go. Now, we highlighted what is happening in the economy. We talked of credit growing. We don't want to choke that credit. We see that the growth is coming. We don't want to choke that growth either. But if in the overall scheme of things, inflation continues, that's an enemy of all this. So even if you want to grow with stable macro environment. You don't want to have a situation where you have high growth, but at the same time, your purchasing power is being eroded. So this to us is extremely important, and that is consistent with the mandate that you, the people, gave us to do, that we must fight price stability and financial system stability. So this is what underlies why we did what we did in our meetings over the past 2 days, is to try and get inflation back into the target range. I conclude. Thank you very much. God bless.
Thank you very much, Governor. We will now go into the question and answer session. As always, we'll take 3 questions from this audience, and after that, we'll take 3 from our online audience. So those that have got questions, please raise your hand. Someone will bring a microphone close to you. State your name, institution, represent.
Good afternoon, Governor. My name is Sandra Mlenga from Sun FM Radio and TV. I have 2 questions. You touched on inflation and why the Bank of Zambia has increased the MPR. You spoke about the adverse implications to the economy if the debt restructuring program is delayed. Now, as the central bank, do you have any other suggestions, and like entirely depending on the IMF programs, so that this does not have effect on the citizens? And also, I would like to find out, since the closure of the gold mine, the Kansenseli gold mine, how much gold does the central bank have in the reserves? Thank you.
Good morning, Governor and the panel. Taonga Mitimingi from Bloomberg. Mine is a 3-part question and relates to the bills. The latest. Hello? Okay. The latest bond and treasury bill auctions have highly been undersubscribed. Did the lower participation from NAPSA play any role in the low uptake? And if so, can you quantify this? And lastly, how concerned is the Bank of Zambia about NAPSA's clients withdrawing their 20% and this heating liquidity at NAPSA, thus negatively impacting the pension scheme authority's ability to participate in the Bank of Zambia auctions this year?
Good afternoon. So, I'm Ketra Kalunga from Tanzania. This goes to there are concerns from holders that the police measures that the Bank of Zambia is putting in place, such as raising the monetary policy rate and increasing the statutory reserve ratio, so far do not seem to be achieving the exact effects, the positive effects on the economy, as things on the ground are seemingly getting worse with high prices and high exchange rate. And they are also preoccupied with the controlling of inflation at the expense of ensuring economic stability. And the other thing, there are speculations, Dr. Kalialia, that you had resigned. Are you contemplating resigning?
Ketra, at this point, I will invite Governor to respond to those questions.
Thank you very much for those questions. As Bessie said, I'm flanked here with my colleagues. There are others in the audience here who help to shed light on some of the questions that have been raised. Now, the first question was by Sandra over the debt restructuring and were we over dependent on the IMF and this. I think let's put things into context. I think the fact of the matter, we are in debt distress. Okay, we defaulted in 2020. That has not been resolved. So normally, if we are a private company, perhaps would have been in the courts of law ordered not to be operating. But we are sovereign, and there are certain measures that we took as a country to give ourselves room to deal with this matter with the creditors. Otherwise, you see, the creditors are holding in their hands agreements that we signed that if such a thing was to happen, they would take action. But they haven't done so. Why? Because we have been proactive in forth with very credible way of doing that. So one of the first things we did was to sign on to the debt service suspension initiative. That was one window which was available to countries like ours who were struggling to make debt service. Unfortunately, the sunset came in December 2021 on that. But still, the creditors are holding on because there are other mechanisms which are in play. So for us, we also signed on to the common framework. Where we heard people, but why did you go into the common framework? Why didn't you just go, for example, on a bilateral way? That would have been extremely challenging. Why? We have so many creditors. So each one of them has different terms and what have you. So under the common framework, we are trying to bring all of them so that they can give us that relief in a comparable way. So in signing up to that, we put, if you will, foot in the door to resolving that. So if you lift that, then it means that we have now to go individually and try to get that. Now, I don't know how many we have. It's quite a good number. of creditors. We have, for example, the ones you know, the bond holders. We have three types of bonds that we have. The ones we issued in 2020, maturing in 2024. Then we have 2025, 2026. So all those are different players. Each one signed on to that. That's one. Two, we have bilaterals, which means countries which we owe money. Then we have companies who come in the way of like parastatals who lent money to the country. So that way, managing that whole process, if you went individually, would be extremely difficult. Now, these creditors, if you recall, I take you back to 2019, we used to have long debates where our debt figure being disputed. You know, each time you produced a figure, people were not very satisfied. So the same creditors demanded that no, you must go to the must have an IMF program so that we can see clearly what is going on. Because with the IMF is that all the 190 members have that opportunity to have their economy surveyed. And they do that even if you don't have a program or you have a program. That is in the Article 4 consultations. So that Article 4 consultations gives people assurance that you have information which is comparable. Now, you recall what happened. We had to engage Lazard and White and Case. Why? Because they wanted the credibility brought to the numbers. So that debate, we went over it, and Lazard is still there providing. So there is no question now on the numbers that we have. Everybody can relate to that. You can go to the Ministry of Finance website and you see those numbers. So the subsequent thing that we have to do is to get the debt treatment. What happened in December 2021? We reached a staff level agreement on what we were going to do, and the creditors came forward and provided assurances that they supported our effort to have debt restructured. We had hoped that this would begin in earnest in the first quarter of 2022. There were challenges throughout 2020. Second quarter, we didn't have. But by third quarter of last year, we were able to get the program. As you are aware, on 31st August, we got the program. Now, following that program, the idea was that by the time the first review would happen, which was to be in the first quarter of this year, based on the outcome at end December. And for that, a number of targets and structural benchmarks were agreed upon. And we had a team coming here to assess how we are doing towards that. That team concluded on 6 April, which is just last month, that we had actually met all the targets that we agreed. So what we are saying that we met our obligations in full in terms of what was expected. But there's one element which is outstanding to conclude the review, that is having an MOU with the official creditors. A lot of engagements have been had, and they are continuing to see how we can move forward on that. So we get commitment, but the process is very slow. I think you do well to look at, as a journalist, what is the difference between the HIPC initiative and this common framework. The common framework is very scanty in terms of details of how once you get into there, you are going to move to the next stage. It's a relatively new framework, which was hatched by the G20. So we have delivered our side of the bargain. So what incentive then should there be to a country other than performing on what it committed? So this is a challenge to the international community as well, because you have met your right of the bargain. So that's where we are. And we are confident that we will get that resolved. It's just that it's longer than it. Then why are we insisting on this? We're insisting on this because we are in default. We are in debt distress. So if we don't lift that distress off our heads, we will not be able to do certain things that we want. But you are right that we should also be doing certain things. This is why there's a mounted campaign to get investors to local and the foreign to go into productive sectors so that we can get growth going, we can get exports going. But the process is slow because some of those who want to bring in money, they are not very sure when this debt overhang is not dealt with. One of the things which has been raised as a question here by Taonga on the under subscriptions, part of it has to do with that there has been non-rollover of the securities held by the non-residents. Usually when the maturities do come about, when there's clarity in the atmosphere, they roll over this. But now we are suffering non-rollover. So until you resolve the debt problem, you have that. Then you have this tightened financial conditions. What that means, the positive side for the investors is that it means interest rates in the US, in Europe, are now positive. You recall that you had the negative interest rates. Now they are positive. That means that the returns on whatever investment you make there is now positive. Now, when they compare Zambia, you have your treasuries fetching, say, for argument's sake, 27% or even 30%, but inflation is running at it. Then there are these risks. But they look at the US Treasury, maybe it's offering 5%. The 5% they feel is much better than the 30% where you could end up losing it. So those are some of the dynamics which are there. So I think it's important to understand the broader pictures which are going there. Because if you take a narrow one, you forget the bigger picture and you end up actually not achieving what you thought you are going to do. I hope that helps to explain why the government is sticking to this, because that's the winning thing. And the government is making all the moves to get this resolved. And we are confident it is going to be resolved. But we are saying that for as long as it is not resolved, it has these negative impulses on our economy. I hope that helps you, Sandra, on that. Now, on the gold, I think I'll ask my colleague here to shed some light what is happening on the gold holdings.
Thank you, Governor. Good morning, everybody. On the gold in our reserves, we currently have about $103 million. This year, specifically for 2023, we've purchased about $13 million up to now. And then we also have the gold, which we Kasensedi, which is gold, it's about $1 billion. Thank you.
Thank you very much.
Sorry, Governor, maybe just a point on the IMF. Is IMF the only way? I think one of the things which gets lost in the story on the economy is that the program is really built around the government economic policy documents, right? So whether it's the 8th National Development Plan, whether it's the medium-term fiscal framework, the different budgets of the government. And that's really, if you look at even the Memorandum of Economic and Financial Policies, which is part of the documents which were issued when our program was approved, all of these things are referencing the government's economic policies. And I think we don't do enough to spend a bit of time and ask the questions about those economic policies and the efficacy of them, because that is where the meat of what we're trying to do is. And I think this is why Governor also mentioned some of the actions which have been taken to attract investment. So That's really the bedrock of the IMF programs, policies which are put there. It is the government's own policies which they've put forward.
Coming to Taonga's set of questions, I think individual entities' participation in an auction, I think that's not how it goes. We give you the broad number, but if you want to see how NAPSA did, I think you are a third party, it would be best you ask them to find out how they did. But what we can say that yes, there was under subscription in the bond auction overall. Now, the other aspects that you raised about NAPSA, I think those we can deal with them the way we see them impacting the economy. You know, one of the things that has to be appreciated is that NAPSA is not a bank or a financial institution, so it doesn't create money as such, because banks create money. So when they lend money, they open accounts when you borrow, and that's how money is created. So NAPSA is banked also, which means that now what is happening is that money, when the withdrawals happen, move from one account to another. So in the state, nothing changes. Also, when individuals withdraw, typically drawing it through a commercial bank, right? So yes, at the some of that money may withdraw, but it comes back in another. If you buy taxable item, it will come, unless maybe when you draw it, you are going to sit. But the important thing also to bear in mind, the behaviors of the holders of the money is, when it is an investment, institutional investor, so predominantly it will invest that money. But if you, chances are that you may not invest the whole of that money, you put it in something. So that will have an impact in terms of economic activity. But at the broader level, we don't see that really tipping the scale, as it were. But obviously, NAPSA has been preparing for this coming, because the bill didn't just spring up like that. It has been in the making for some time. So they were preparing for that day when the bill will become reality. So they are kind of in a situation where now they have to meet this initial demand, but it will settle at some point and then start to do their activities. So, but on the exact number, I'm afraid we can't share with you for those reasons. But maybe you can add something if I have left something on the dynamics of.
Yeah, I mean, I think you, especially when you were describing the risks around the foreign exchange market, but I mean the government securities market. But if you look at the first quarter, I think the is a bit different from the tradable market over the first quarter. I think what you'll see, okay, maybe it wasn't in the governor's presentation, but what you'll see is, I think out of the 6 auctions we had, 4 out of 6 were oversubscribed, above 100%. The other 2 weren't. And so the average subscription rate, I think, was something like 107%. So we got more than what we requested for. And this partly made up for the fact that the government bonds themselves, though, were undersubscribed. In January, the bond was oversubscribed. We had a participation of some non-resident holders in that auction. But in February and March, it was undersubscribed. And I think subscription rate may have been around 70%. I think a bit better than fourth quarter, but still undersubscribed. But I think the governor has mentioned the dynamics which are there.
Okay. Yeah, just one additional part. There are those who are paid through the mobile wallet. That also you have to bear in mind that if you have a mobile wallet, there is a bank account sitting there, the trust account. because the ones who are issuing that have that account. So there's a matching there. So you see that even if you get it on your phone, there's a mirror on in the bank account. So the money is still in the system, so to speak. So it's only when actually you spend. But not on that. It all depends. If there are people who are getting notice and they deploy it in a productive way, then you could get individuals also progressing. So it shouldn't only be looked from the negative side that NAPSA is losing that money. Put that money, put in an entrepreneur individual, it is income that they get. They don't have to pay any interest. It's their money. So instead of going to the bank to get the loan that you previously would have, then they could. It's just that here, we are not very good at working together, because if the people who are accessing that came in together and they pooled that resource, it could amount to something sizable and be able to do something. We have seen some are already obviously coming also in the government securities as well. But the other part to consider, you remember we showed you a slide where we are showing that private sector credit is growing. That's in a way what we wanted to see, because you have been complaining of crowding out, government crowding out the private sector. So as more private sector players come into play, that's what we would want to see, especially when you consider the fact that today we a private sector driven economy. So these developments, they are not development in isolation. They are important in the bigger picture of where you really want to go. I hope we have answered your question, except for that part. Ketra, you raised some interesting that the measures that we are taking are not achieving the intended objectives. I think some might say that, you see, it's either you are looking at the glass is half full or is full. Now, one of the things which we tend not to take into account is the nature of the economy. I think we are in a hurry to see normalcy in a place which is not normal. You know, we have overhang, debt overhang. We have just come out of the COVID, which is still having lingering effects. We have had copper prices, we have the mining companies not operating. So I don't know if we can characterize the environment that we are in is normal. I don't know. From where we sit, we see challenges, but there are opportunities too. So relative to what is happening elsewhere, we are actually at a bit. Other people are envious of where we are. Say, you guys have all these things going, you know, but we are fighting to get what is happening. But for us, we are always looking, the grass is greener the other side. I think, look back, the environment you're operating in is far from being normal, because there are all these problems we have had to go through, which we are still going through. We had the climate change now, where you grow something and suddenly weather pattern comes, knocks you. You wanted to grow something, you wanted to manufacture something, electricity goes down because there's a load shedding. So all these things have a bearing on what you end up doing. But if you step back, are we doing worse off than we are doing? That's for you to say, because if I tell you we are doing, you say, now that I've self-praise, but we have opportunity to look at other economies and see what is happening. Even in these big economies now you are talking about, we are just coming recently from the US for the spring meetings. Prices have gone up very high. In Europe, prices have gone up for all these things. But do we see them coming here complaining to say that no, they are wicked? So equally, there are certain things which are going in the right direction, and others which we still have to do a lot more. On balance, we would like to think that there we'll be lying if we say we want to be there. But inflation, it's at 10%. It has been 9%. Don't forget where it was before. We had reached over 20. I just demonstrated to you in the slides that I showed you. In 2022, first quarter, we're at 14.1%. We come to the quarter that we are just reviewing, we're at less than 10%. That's not trivial, you know. Now, just to let you in, if we were to bring inflation down through our monetary policy action, the kind of change we would have to make is huge. We would have to drive the policy rate to well over 16%. Then what happens? All these other benefits that we are talking about will just evaporate. So we have to treat very carefully that in an effort to solve one problem, we don't make the other problems worse or create other problems as well. So this is how we move. We don't just push without regard to it. That's why we're saying that, you see, we have inflation to guide us, but then we have other factors that we look at. So in totality, when we put in this, what is a reasonable action that we can take? Because if we blindly, as others are suggesting that we are doing, we're just fixated with that, my dear, we could get inflation down, but what happens to the other things? They will be out of line. Is that what we want? No, because fighting inflation is a means to something. It's not an end in itself. That's what must be also be borne in mind. We are doing this to get other aspects of the economy going in the right direction. I hope that helps you to contextualize things. Then to the personal question that yes, I was equally taken aback when I saw that when people, I think it arose out of a story which was being told, but we are full of imagination. We are not at that, we'll cross that bridge when it comes. I'm here for not discuss any resignation with the minister. When people are speculating that I was locked in a room with the minister negotiating, the minister was in London, I was in Rwanda. We were not locked in any, those who are following would see that. So that's true. And as I said, if there is anything that you wouldn't doubt, that it has happened, it can't stay in the bottle like a genie forever. Okay, so rest assured, I'm here, and we have this meeting, and but people didn't believe I'm here. Thank you.
Thank you very much, Governor, for those responses. We have quite a number of queries from our online audience, but most of them are related. The question that Ketra asked on the impact that the adjustment in the MPR has on the economy, I'll not repeat that because Governor has handled that. So some of the questions that related to the questions that we already asked in the auditorium, I will not repeat those. The first question, Governor, is the central bank considering the RMB as a reserve currency in Zambia? This is asked by David Daka. The second question, are there any plans to possibly allow Zambian nationals to participate in the procurement of gold through Bank of Zambia? This is being asked by Patrick Mwale. The third question, fiscal policy has approached the market with an expansionary policy, as can be seen by the projects that are taking place, and the recent NAPSA partial withdrawal, while the central bank is approaching the market with a contractionary monetary policy. How are these two working together? How do you reconcile those? Governor, you may take those 3 questions.
Okay. Thank you very much for those questions. Remember, how you hold current as an asset, you have to look at your obligations and the activities of it. There is what is called a strategic asset allocation. You don't just wake up one day and you start to say, no, this is what will be my reserve currency. You have to look at what your obligations, what activities are going on in terms of transactions. Because what you see in many countries, the renminbi is there. It was admitted, I can't remember the exact date, is now a part of the SDR basket of currencies. And a number of countries hold that as reserves. We do have as part of our reserves, but through the BIS where we keep our reserves, we have part of that. But if it was that simple, we would have had no problem. Actually, we are in discussions, which we started some time back, to see if we could actually open channels of transactions in renminbi. I think at an individual level, it's possible now. You can get some renminbi in the Bank of China here and you go and use in China. But it's not at a bigger scale. We have been in a conversation with them that if, for example, the debt that we owe China was to be converted into renminbi, we wouldn't be seeing some of the pressures that we are seeing in the foreign exchange, because everything that we do in the final analysis is translated in the US dollar. And that's what is hurting you. You look at procurement of oil, for example, it's quoted in dollars. You see procurement sales of copper, they are quoted in dollars. So as of now, the dollar is still a major currency in terms of transactions. There are efforts by some countries to go the other currencies, but in the final analysis, that is dictated by where your obligations lie, because you still have to convert, even if you have to have that. So the idea of promoting renminbi transactions has been there for some time, but it's a process to get there, because the transactions, if you go to China, you go with dollars most of the time. These dates that we have, they are converted in dollars and so on and so forth. So as of now, it's still quite a distance to get to the point that we can say that we are holding. But as part of our holdings of reserves, some of them are in renminbi, but it's done through that's the Bank for International Settlements. So I hope that answers your question. Then individuals procuring gold through Bank of Zambia. That's a very tricky one. How would that happen? Why would that really be beneficial? I'm not sure. You may not be happy too, because what you are doing for us to make sense to get the dollars, the gold, we pay in kwacha. So if you brought that we paid, you may be disgruntled. In any case, for the bank to buy the gold, it has to have a certain purity. It's not just the gold that you pick from wherever it is picked. It has to be processed to bullion standard in order to qualify as a reserve asset. So that is not things, but I think what could work is for people to sell to us, not us buying through us. I don't know, maybe you understand it.
Yes, no, thank you, Governor. Yeah, I think I was also not quite on what the question really was, but I think in terms of gold, as I had indicated, we had begun a program of purchasing gold from one of the local mines, Kasenseli, but that program was ended until they resolved their issues. So that is one avenue, as Governor is saying, where we are able to buy gold if we can then have it refined to bullion standard. That's a process which we began and which we hope we can continue when Kasenseli is back up and running. But there is also work going on, I know, under Cabinet Office, I think, which is trying, and Ministry of Mines, I think we're trying to look at how you get the small-scale gold miners to come together. And obviously in that environment, Bank of Zambia would be a natural off-taker of that gold, assuming that all the processes of how it's mined is done, so that we could then refine it with the main refiners. So I think that is the direction of travel.
Now, the question on the NAPSA, that NAPSA is doing extreme, the Bank of Zambia is doing contractionary. Let's pause a bit. These are, you see, what is the objective of NAPSA? Sorry? Oh, I thought it was working through NAPSA. Can you repeat that question, please? We didn't hear it.
Fiscal policy has approached the market with an expansionary policy, as we see various projects and the recent NAPSA partial withdrawal, while the central bank is approaching the market with a contractionary policy. How are the two working together?
Thank you. Very, very well. If you have an over-expansionary fiscal, this is why we have the debt. That's why we have the problem we have, because it was over-expansionary. Now, the theory has it that the sustainable level of deficit you must have is about 3% GDP. That's what conventionally is the ideal. So you can see that the government is doing everything to lower its deficit. Now, yes, to the extent that there is a deficit, you can say that it appears expansionary, but there is an objective there. Now, when we talk of macroeconomic stability, what do we really mean? One is to have low and stable inflation. Two is to have a low and sustainable deficit. Three, you must have a stable exchange rate. Now, if you look where we are, we have had some measure of success in this. We have seen, even in the statement, we are pointing to the fact that there is fiscal budgetary discipline coming on, but fiscal consolidation is a process. It still has to happen. You recall in our previous settings where we used to point out that the deficit, which was excessive, you saw a build-up of domestic arrears. What was happening? Some of you were even negatively affected if you're working for government, in that you went out, got a facility with a financial institution, and then you had your check, I mean your pay cut, but the limit was not big. That's how it became. This has been resolved now. We don't have that challenge. That's why, again, now we are also, these are some of the vulnerabilities we are talking about for the banks, not to dash again to feel that to get more people signed up for debt, which they are not able to sustain. Now, this contraction which you are talking about, we want inflation to be low. Because with high inflation, you can't have macro stability. Now, why is macro stability important? See, inflation is like a thief in the night. You see, you think you have this money, but when you wake up in the morning, you find that it can't buy much. We see, I don't want to point to a direction where there was a hyperinflation where, in fact, you have to carry money in a wheelbarrow. People preferred not to get your money, but to get the wheelbarrow itself. That's how bad it can be. We have seen this happen in Latin America. In the region here, it has happened. So inflation is not something people want to live with, you know, because if it is out of line, even the fiscus that we are talking about becomes problematic. If the exchange rate is continually being out of line, the fiscal expansion we are talking about wouldn't happen, because what happens? We are negotiating debt here, aren't we? The servicing of that debt is in foreign exchange, in foreign currency, sorry. Now, if the kwacha is depreciating fast, what happens? In one period, you need so much kwacha. Depreciates, same quantum of dollars, you need so much kwacha to service. So it erodes the budget itself. We have seen this happen when that's how we ended up defaulting anyway, because we could not cope. All the taxes that we are getting were ending up in debt service and in paying wages. What do you have for investment? Zero. You have to go to other people now to ask for them to build you a road to do that. But at some point, they'll call that in. So where do you get that capacity? So the apparent contradiction that you're saying in the actual sense of the thing is not there. Yes, we are not going to be walking this way all the time. There may be times when we do that, but we are converging. That's the reality of life. It's like even in a family, you wake up in the morning, you go to do something hard, someone goes and does something. In the evening, you meet, oh, how did we do that? So the important thing is to talk to each other. When we are doing what we are doing, is the ministry in the know? When they are doing what they are doing, are we in the know? Is what they are doing going to impact on what we are doing, and in what way? So this is what you should look at, not simple pronouncement like we have done that, we are raising the policy. This is, oh my God, now it means that the central bank is contracting this, whereas the ministry is doing. It's not like that, because even if you get an NAPSA payout, if inflation is too high, it will not amount to much. So these are some of the necessary kind of breaks that have to be done. You see, as a central bank, we are also a regulator. You see, when we see people getting very jubilant, we get concerned because the end result is some accident, So we have to manage that process so that you can have that happiness over a longer period. I hope that helps.
Thank you, Governor. We can go for the last round.
On the issue of the expansionary, I think in Governor's slides, he was talking about how government borrowing has declined and the private sector borrowing has been able to rise, the blue and red bars you were referring to. I think it's important to note, I think in 2020, the deficit as a percentage of GDP was something like 14%, maybe 14.2. This year, you're going to be below 7. So if anything, the consolidation is real and is significant in terms of what the government is doing, and that is what's allowing these other things. I just thought it's important to correct that.
We can take the last round. I can see 2 hands. Yes, please. Please pass on the mic.
Governor, good afternoon. Prudence Chota from Kamni TV. Just a bit of education. I want to find out, why is there a difference between the MPR retail lending rates I ask this question because I know you did mention that the private sector credit is growing, but we don't know where this money is going. Don't you think there's the private sector being skeptic in how they are spending this money they are getting on the retail price? We've seen banks boast of huge profits, but we are seeing less of the private sector boasting of any profit, if any, to say. So why is there that difference between MPR and the retail lending rates? And then also just another question. I think on the reserves, we did see a little bit of reduction in the reserve. Was there any resource that was released into the economy from the reserves? Yeah, thank you.
Thank you. Soilanje?
Thank you very much. A very insightful presentation, Governor. My name is Suilanji. I am from the Zambia National Broadcasting Corporation. My question was, I think one of my colleagues touched on the statutory reserve ratio. On the 1st of February, the Bank of Zambia did issue a statement that effective the 13th of the same month, the minimum statutory reserve ratio on foreign currency deposits would be increased by 2.5 percentage points to 11.5% from the initial 9%. And the reason given for that was as a result of volatility in the exchange rate and also to safeguard stability on the foreign exchange market. The statement ended by saying that the Bank of Zambia would review this measure by June 2023, which is next month. Now, interesting to note, earlier it was put in a way that, look, you're making these measures and we're not seeing results. I think that was a very blanket statement that was made. And it's understood because the evidence is showing that on the day that this came into effect, $1 was going at 19.3 and it kept depreciating until the 31st of March. And that's the day that Vice President Kamala Harris came into the country. That's when we began to see some appreciation in the exchange rate. I want to go back to the Bank of Zambia's plan to review the measure by June 2023, which is basically 2 weeks from now, next month. Do we see the Bank of Zambia taking this further, or do we see the Bank of Zambia saying, you know what, this didn't work, let's just go back to the way things were? Or is it a question of let's be a bit more patient as a country? These measures may not yield results when we want them to yield results, which is in the moment. Thank you so much.
Thank you very much. Anyone with the last question? There's a hand there.
With the IMF up to this stage, as of now, what is the major sticking point to the MOU by the official creditors?
Sorry, Mr. Mfula, can you repeat your question? Our online audience were not able to pick up what you were saying.
Yes, my question is, what is the main sticking point to the official creditors giving a memorandum of understanding for financial assurances so that the IMF can disperse the 188 million?
Thank you. Governor, you may proceed with the answers to those questions.
Thank you. Thank you very much. Prudence, you raised the issue of the gap between the monetary policy and what is obtaining in the market retail interest rates, and also the aspect of banks being profitable, whereas the others are not. Now, first, they will not be one-on-one because then the bank, how do I put it? The rate is actually the cost at which the commercial banks will get money from the central bank. Okay. Now, it's inconceivable that the commercial banks borrowing at that rate will also lend at the same rate. So there will always be that gap. The question is the margin, you know. So with that, one of the things we have been saying, and we'll say it again, is that this is a process, okay? When we are setting the MPR, what we are targeting is the interbank rate, overnight rate. That interbank rate is the rate at which the banks lend money to each other, you know, because they know each other very well. They will give them to each other at rates which are reasonable because they reflect the liquidity that they have in the market. So that's why this time we didn't show that chart, but we normally show where the policy rate, the interbank rate is. Now, the idea behind that is at some point would like to see that the banks in their lending activities, they take that as the main reference point. Now, how does that happen? It will happen if the bulk of their sources of financing comes from us. Okay? If it doesn't, then they have no real reason to use that as basis because there will be other sources where they get the money. So one of the things that we have been doing is to encourage automation, the government to do all the things through the banks, through the central bank and through the bank's automation, so that we seal some of these loopholes. One of the cheapest source of money the banks have is you as a depositor, because they don't give you high, in some cases actually, much of our deposit holdings are current account. Now, the current account doesn't pay interest. Why? The thing is that the principle of banking is that you are pulling resources together, right? So the expectation that not everybody is going to come to demand that money at the same time. So that gives you the float, which you can use for lending, okay? So you get those who are, then you lend those who want to invest, okay? Now, in our setting, there is a lot of noise, like we are discussing the government securities. If the government securities, for example, are of what is the rate now? 13 something. For
bonds is mid-20.
About 24.
Dr. T basis
Yeah.
maybe 15.
So look at the bond rate, 24. Look at the policy rate, 9.5 now. See that gap. Now, the commercial bank, the CFO, the chief financial officer, says that, but look, do I give this money to Prudence, who could do actually default, or just, default, run away, you know? Or do I put it in this where I'll get that 24% without doing anything? All I have to do, put it there. So these are the competing things which are happening, the trade-offs. So that's what has been happening. They will put more money where the returns are high. Okay. Now, if now you are to borrow, they will start at the 24, not at the 9.5, because they could get 24 without doing anything. So now you come, that 24 is riskless. There's no risk involved. It's rated is 0. Now you walk in, they will assess your risk. It says, this one, where is the source of income? Very shaky, you know? So maybe we'll put a margin of 10. So instead of getting at 24, we'll give at you 34. This is how it goes. So it's these different channels that are available. Now, what we are saying is that when the macro settles, that premium which is being paid on the government paper will disappear, okay? Which means that now we'll get closer to the policy rate, and the policy rate then will become an effective instrument for lending into the market. I hope that clears that why there is that gap. You still look not convinced. Maybe we can take it offline to see, but okay. So that's one aspect. Then you raised the second part. Okay, first, maybe before I move away from that, the banks are there to make profit. That's their bottom line. Now, banks are different from any other company. Why? They hold your deposit, all right? The money they lend, much of it is other people's money. That's why they can't lend long term. Now, why is it that if a bank fails, the government gets involved? It's because of the depositors there. And what justifies our role to oversee them is the depositors. Otherwise, they are a private company who should be minding their own business. But to the extent that they are getting people's money, depositors, we get involved. That's why these laws come about. So they have to make money to be in business. Yes, the times the profits may be accessible. We also, behind the scenes, we are telling them that lend more. But you see, the more they lend, the more they make profit. You see? But your point is to say that we need to see more productive borrowers getting access to that money. It's a process. And that's why we have gone on the financial inclusion campaigns, and all these are all aimed at achieving exactly what you are talking about. Then on reserves, I think we have been very open. We don't hide. We have told you that in the period, maybe it didn't come out. You see the presentation when it comes. We provided market support of $377 million. Part of that, a good chunk of that, came from the mining mineral royalty taxes. But because they were low and the demands were high, we had to augment that with some support from what we had to ensure that you had fuel, you had these other essential commodities that you had. So it's there in the presentation, you see that. Sorry? Okay, so what are reserves for? Maybe that's the question. If you have an emergency, isn't that what we want? So if you need the fuel, you go to the filling station, there is no fuel. The industry can't operate. You can't take someone to hospital. So that's the right way of using reserves. That's why you keep it. Why do we measure it in terms of import cover? It's those imports, isn't it? So that's the thing. So we don't just go out and give them out. We look at what is the strategic importance of that. Okay? Then on the question, we are running out of time, I'm told. Suilanji, thank you for your compliments. Yes, we stand committed to reviewing. Remember, reviewing doesn't mean you have to change. It's reviewing. What will make you change is if the information at that point points to changing it up or removing it. So we are guided by evidence on the ground. Even the MPR that we are making here is the evidence that we are sharing with you, which informed us that you needed to make a change. So end June, we'll take that review and determine whether it's still necessary to have the statutory reserve ratio at that level. If it's not, we'll adjust. But if the circumstances will be such that you need even more, we may decide to raise it. So evidence will have to guide us which direction we go. So that commitment still remains. We'll do that. and we'll make it known where we come out on that. I hope that's helpful. Now, you are saying that maybe things will take long to do. Indeed, certain things take long. You see, the actions we are taking, it's like a chess player, right? When you are a chess player, you make a move. You don't force the other person to move. You wait until they are ready. So this is what we are doing. When we raise the police rate, it's the other actors now who have to do that. We can't go ahead and, why are you not moving? They are taking their time. So this is where we talk of the transmission mechanism. Is it straightforward that when you do this, immediately it results, which is very much related to the question that Prudence raised. So it's a process, but we are moving. I think we are getting traction, and that's important. At some point, you see what appears to be not really working. Just like that, it works. But we have to be patient. As the central bank, we are optimistic and we are patient, because if you are impatient, you can't get the results that you want. You have to, part of the process is what we are engaging here, for you to understand and relay it to the people there. Oh, there's this. And then people say, okay, now we are seeing, for example, in government securities, individuals are coming because we have been campaigning. Come. You say, no, suddenly, why didn't I know that? Which is the same thing to you, Prudence, that's the competing. You can also aim that almost 24%, which brings competition, and that will bring it down. Finally, Chris' question on the process, like I tried to explain, is not very straightforward, because we are among the first countries to go into that. So a lot of learning in the process, but of course we are anxious to get. So we see that some meetings have been lined up for the creditor committee to look into our situation. What we are expecting is that we move now to getting towards that MOU. But it has been a long process. I'm sure you have seen statements which the minister has made, the president has made. When we were in Washington for the spring meetings, we met all these key players. They are all promising that, no, they'll come. But like I said, we can't hold them now do that. They have to come because remember, they are taking a big discount to move forward. So that money, some of it is taxpayers' money. So they have to explain to their people that, no, look, that loan we gave to Zambia has failed to pay it back. So we have to take part of the loss. So that's it has to go through their parliaments and all that. So it's a very tedious process. But I think once Zambia goes through, some of the rules will be better outlined, and we hope the others who follow behind us will not face the same challenges that we are facing. I hope that explains. Thank you.
So with that, we have come to the end of our press briefing. Thank you very much for taking your time to join us. To our online audience, we thank you for your participation. Allow me also to pass a special gratitude to the production crew, ZNC crew, for your continued support. Until next time, thank you very much. Do have a blessed day. Let's remain upstanding as we allow the governor and his entourage to leave the auditorium.